Prashant Khemka joining in this morning, founder of WhiteOak Capital Group. Prashant, thank you so much for speaking with us this morning, because we need calming voices right now, even in terms of what we're going to see in the markets next couple of days. Of course, brace for volatility, but what is the investment outlook at a time which is very emotional for each person?
No, definitely. See, over the next few days, what happens is very, very difficult. In fact, impossible to say. It will be a function of how the situation evolves. Uh, Going by the past precedents, um, while volatility is there, while while the situation exists, it normalizes very quickly as soon as the situation de-escalates. Now we can't say for sure when it would de-escalate, um, uh, but but we see it more as an opportunity at this time. The market is obviously, while volatile, if you think about it, was down 1% yesterday, maybe down 1% or so this morning. So it's not like hugely volatile. At least the market is suggesting that the probability of this thing getting out of hand at this time is fairly low. Yeah, because 1-2% here or there is not a big move if you think about it. So we'll be watching. The indicators of what is in store. The best indicator to us is the market itself. Um, and remains to be seen how it evolves, how the market evolves, and how the actual situation evolves. But for us, we remain fully invested. We don't have any cash. We are not going to build any cash, at least as far as I can say at this point in time. Neither in client portfolios. Personally, I'm always fully invested, so that doesn't change. The current situation doesn't change that.
Hi, Prashant. Morning, Alex here. So I understand you don't have a strategy to hold cash and you're fully deployed, but you also, as a fund house, have certain strategies that are nimble-footed in terms of asset allocation. You have a multi-asset fund. You also have a balanced advantage fund. I'm just curious about the equity position on the long side currently. Have you changed that at all, basis the current geopolitical uncertainty?
So I'm not on top of that. Obviously, the team, the fund manager, he'd be a better position to answer that. But as far as I am aware, there hasn't been any change related to what's going on in the last couple of days. The equity position that the fund has is as the fund is supposed to be a multi-asset fund. It is already, compared to the vast majority of the peer group, on the lower side. And I don't think we've made any changes in the last few days on that one. But I may be wrong on that. I'm just saying from what I've heard internally.
Prashant, my question coming to you over here is taking it from Tamanna, from where Tamanna left, in terms of what should you be doing in times of uncertainties. Now, if you talk about the past wars with Pakistan, you've usually seen initial drawdowns, which have then been followed by swift recoveries. And it's a typically two-phase kind of an impact that you see in terms of the markets. Historical data suggests it's your sectors like media, metals, and banks that have usually outperformed in times like these. And in case of India retaliating, you have sectors like cap goods, real estate, and PSU banks that have led the gains. What should the strategy be now if an investor has to take advantage of this kind of a situation?
Thank you, Hiral, for the question. First of all, I'll just confirm to Alex that I checked during the commercial break that, and my guesstimate was right. The team hasn't made any changes to the equity allocation over the last few days. So that is that. Hiral, to your question, the reality, in our view, in our experiences, a nimble-footedness or laziness, doesn't, or nimble-footedness certainly does not help over time in such situations. Maybe sometimes you can make money, at other times you'll lose that much, and at the end of it all, you'll be lucky to be break even. from such moves. So I find, and if you think of just COVID, the last about exactly 5 years ago, think of tariffs just about a month ago, right? There was so much nervousness. Many people were calling it the biggest crisis after global financial crisis. So COVID was supposed to be bigger than global financial crisis. And then some people, investors, learned investors, and otherwise business people, they're talking about this being as bad, causing as much damage to global economy as the Great Depression, because the tariffs were last time as high as this, 100, or not 100, but somewhere in the 1930 or so. So the fear factor becomes the driving force during such times, emotionally charged, and to take any hasty decisions in such situations usually don't play out in favor of investors. And our uh, way of dealing with it is basically to do nothing, to let things settle down, stay invested, and that has served us very well in the past. And I think that's how we are going to do it this time as well, Hiral. And that would be my suggestion to viewers as well. But each one has to decide really based on their perception of risk and their tolerance for uncertainty.
Right. Thank you, Prashant, so much for joining us on the show. And that's an important advice that's coming in for the viewers as well.